recording the webinar. It's May 11th, 2020. These are the May 2020 coaching calls. I'm Rob Booker. Remember, all trading involves a substantial risk of loss. Past performance is no guarantee of future results. This presentation is intended to be informational and educational. It's not a recommendation to buy or sell any financial instrument. And if you need personal financial advice, consult your financial advisor, right? Okay, it's May 11th. Today, we're going to kick things off. Mark, thanks for the additions to the Bounty spreadsheets. That is just really much appreciated. And that's number one. Number two, we're going to look at an overview and a discussion of the perfect counter trend trade. And then we're going to look at an overview of the perfect trend trade and a symbol. And then we're going to ask ourselves the question, is GoGo Wireless, that in-flight wireless company, is that a perfect strike zone trade? And then KAR, brought to you by Mark, is that a perfect counter trend trade? And is there a reason that we would do it? So first of all, the Bounty Trades spreadsheet is back, my friends. And we took a little bit of time off, but not for long. We're definitely not going to take any time off of that. I want to see if we can populate yeah, there we go. Volume average. Let's do this. Let's do this thing. I want to make sure that we are looking at the spreadsheet on a regular basis now. And we weren't, but now we are. And I am very much looking forward to making sure we don't miss that again. So good morning to all of you. Thank you, Mark, for the reminder that we really need to pay some attention to these. You guys are putting in work into putting stuff on this spreadsheet. And if you are, then we need to be considering these trades. Okay, Mark added read NIOBF and KOL to the watch list. Our old friend Reeds is bullish again. Insiders optimistic last fall. He's watched Nebraska Niobium mine evolve for years. They've done everything speculative but huge upside. CEO bought 100,000 shares when they got funded on February 20th. And Cole is beaten in bullish. Investment to buy and hold. KOL. Love these three trades on the Bounty spreadsheet. Let's look at them one by one. First, Reed. It's a beverage company. And it's bullish again. Lots of insider buying, Mark. So thank you for publishing this one. This is the 4-hour chart. Bullish divergence, two bullish profit circles, a jump up, then a move back down, and then another bullish profit circle. Tons of pivot targets above. It's trading for, 71 cents per share? I think that you have to give this at least a little bit of your attention, given the fact that it is a stock owned by insiders, purchased by insiders. It's 71 cents a share. Earnings are coming up. Let's allow the earnings to come out. Let's do this. Let's have the earnings come out and see where we go after earnings, and then give this thing a chance. Now, I don't think it's necessarily the greatest idea. Maybe earnings are already out, by the way. It's possible that let's see if they're out. April 27, owner announced it intends to issue financial after the market close. So today, after the market close, let's allow this the chance to move higher. And then let's read the transcripts of the call and give it a chance. We don't have to trade before the earnings. We can wait until after the earnings. If it jumps up by $3 after earnings, then we know that we made a mistake by waiting. It seems hard for me to believe that that's the case. So NIOBF is next. This is another really cool looking financial instrument. Bullish divergence, bullish profit circle, some missed pivot targets above. This is trading for 51 cents a share. If you look at the really long-term picture here, we are in a holding pattern that has lasted forever. Is the coal industry ready for a jump? And I think this looks a lot like a strike zone pattern. If you look at a long-term chart here, we're above all the moving averages. We printed a bearish day. We have bullish divergence and two bullish profit circles on the daily chart. And it has had in the past a tendency to jump. So I like it. I like the fundamentals behind the company. I like the fact that has coal really taken the worst of it? And is it just now printing what Marquet Latimer would call a bullish retirement pattern? It is. It's doing all of those things. So I think this one Mark, I think this is a buy trade. It's retraced down to the moving average. What I want to see is a bullish day. I want to see a bullish day. It's done everything that it needs to do. I want to see a bullish day. So if we jump back over here on the chart we look at, wait for a bullish one-day candle as confirmation. So I want to see confirmation that this is ready to go. And Mark, I'm going to buy probably 1,000 shares of this. Let's just make sure we got enough volume on this thing. All right, so it's only got 108,000 shares of volume. I may just analyze this one for the group, but not participate. 62,000 shares a day. Let's see what the volume turns out to be. I do not want to get into a trade that sort of crowds anyone else out. That's wrong, and that would be inappropriate, and I'm not going to do that. So good morning, Tim. Good morning, Tom, Jeff, Sue, Alan, Richard. Nice to see you all here. So I like this one as well. So this one belongs on our bounty, our 57K list. And then we have KOL. So this, the NIOBF, Nebraska Niobium Mine. Okay, so that's not mining. It's KOL that is coal. Apologize for that. Put KOL on the watch list here, and let's bring it up. Oops, are we having some internet issues? Now, I obviously can't buy this. The volume is almost non-existent. You can see here 727 shares today. But on the 4-hour chart, we have bullish divergence and 3 bullish profit circles. Mark, it's a buy. I think we could also look at the biggest coal mining companies. Biggest coal mining companies, public stock. I think we could also just do a search here. Peabody Energy, Arch Coal, Murray Energy. So what's Peabody look like? Look at that. Look at that. That's 2 bullish profit circles, not the bullish divergence that we would look for, but the 2 bullish profit circles. So let's go BTU. Pull that up on a. So I'd like to see this go above those moving averages. I could totally get into that. Yeah, I mean, coal can certainly burn us, no pun intended, right, Jeff? But if Peabody's trading for $3.66 a share, and I buy 100 shares, and we probe that position and we see where we're going, it's a definite speculative situation, and not for everyone. And it wouldn't necessarily have fundamentals to back it up. It would have to be kind of a strike zone, pure technical play. Very interested in charts and bounty additions to the spreadsheet. It's going to become, again, part of our daily routine, and I love hearing from you about it. Mark, you turned us on to coal. So if I trade Peabody, I'm going to give you credit for that, and make sure that you know and understand my appreciation for you having printed that one. All right, next on the list of things to do today, overview of the perfect counter trend trade. I want to look at Wayfair, and I want to talk to you about what a perfect counter trend trade looks like. And it may require me to go back in time, like Huey Lewis in the News or whatever. And there we go. Perfect example. Here we go. This is a perfect counter trend trade. This is right here, bearish divergence on the 4-hour chart. But then it's immediately followed by 2 bearish profit circles in a row. Plus we have missed pivots below. And if you want to add something a little bit interesting, we had volume weighted average price for the year below as well. And this is a reversion to the mean. All counter trend trades are reversion to the mean. And when I say counter trend trade, I mean literally counter trend against the prevailing long-term trend. Right? So the trend is up on the long-term charts. It's up on the short-term charts. And we're selling it anyway. And we do this when we see bearish divergence, two bearish profit circles, missed pivot levels or targets below, plus the fundamentals of the company seem to suggest that the company shouldn't be doing as well as it is and deserves to get beaten down a bit. And that's a counter trend perfect trade. Now, I also want to say for the record, practically speaking, all successful trend trading is also counter trend trading. Like, for instance, if we wanted to buy Wayfair because the trend was up and we waited for it to dip, it would be a counter trend trade on a short term move, but a trend trade in a longer term perspective. So there's a lot of course, disagreements and confusion about the definitions of counter trend and trending trades. But on this screen right here, you can see that a good trend trade was buying it on a dip in the midst of a longer upward trend, which we'll talk about next. And a counter trend trade is a pure speculative play against the prevailing long-term trend that price is up on all charts. However, we've printed bearish divergence and two or three bearish profit circles, and we have missed pivot targets below, plus even moving average targets below. And in these instances where we do a counter trend trade, it's not a retirement pattern. It's totally counter to a retirement pattern. If we look at October of 2018 on Wayfair, so October 2018, well, I guess it was. I guess it was a bearish retirement pattern. It drops below the moving averages. Is that what? Let's see the date exactly on this. The 3rd of October. We'll look at that. It lines up perfectly. On the 3rd of October, it prints a bullish candle back up against the moving averages, and then it commences that in enormous drop. Wow, it lined up kind of perfectly. Wow. Holy smokes. So a perfect counter trend trade will often line up on both these long-term charts and the 4-hour charts. So if Wayfair can drop here, fall below the moving averages, and then rise back up against the moving averages, plus print two bearish profit circles on a 4-hour chart, we have a possible 30% or 40% drop in the price of Wayfair shares. And that's the time to take the trade. That's the time. The Wayfair fundamentals are not good. The missed pivot targets exist below the price that is going on right now. For every reason that I could believe, this is a great counter trend trade to wait for based on everything that we know about counter trend trading. Those are the rules for counter trend trading. We every so often we'll have this conversation so that we can clue ourselves in. Now, there are times where I have justified, taken, and expressed enthusiasm about a counter trend trade that didn't fit these criteria. And in most of those cases, what I'm really doing is playing with fire. And we know that, and I admit it, and get myself into trouble at times on those things, and I'll get in early. And we have this constant tension between following the rules exactly and anticipating stuff and whatnot. If you look back to 2018, you could, for instance, say, oh my gosh, well, I mean, what if we could get in September on these giant moves upward when Wayfair was breaking new highs and printing divergence, but hadn't printed two bearish profit circles? Well, yeah, it'd be great. But that may have also been a mistake that got us in too early um, at some other time. So what's interesting about everything that we talked about today is you see this is a bearish retirement pattern, so to speak, on Wayfair as well. But we didn't have two bearish profit circles on the 4-hour chart. So it's kind of cool. Okay, that's what I wanted to talk about as far as Wayfair and counter trend trading is concerned. Our inverted retirement pattern's bearish. Silver looks now. Okay. So I'll just take one question at a time. So that's a bullish retirement pattern on silver. And it's nice that it's above all those moving averages, isn't it? Um, the better, well, let's look at the 4-hour chart. Silver, there was no bullish divergence and two bullish profit circles. That didn't exist. So for me, that to me wouldn't really qualify as a buy trade. And it didn't really turn out to really go anywhere either. The bearish trade you see that's circled on silver, bearish divergence, two bearish profit circles, that's incredible. That is exactly what we look for and lined up pretty nicely with a bearish retirement pattern as well. It dropped and it swung right back up and hit the moving averages and dropped. There is on this chart, there are some moving averages. EMA 10 in red, EMA 50 in blue, and an EMA 5 in purple. And that was for Mark. Doug says, please remind me how many 4-hour bars you want your profit circles to be next to the divergence. Pretty close. Let me just say pretty close. 20 bars. I want them to be within 20 or 30 bars, Doug. Oh, VWAP. Okay. So I'm playing around with this after spending some time with what's his face? Mike Burnick last week. So this is a VWAP on TradingView, and let me just show you which one it is. So if we add this, okay, here we go. So there's so many of them, but it's a built-in indicator called VWAP or VWAP, some people say. Any of them really can work. Yeah, HCC is up 6% this AM as well. Yeah, interesting. And it's got bullish divergence and two bullish profit circles on Warrior Met Coal Incorporated, trading for $13. Let's see what it looks like here in this. This is beautiful. So what we need to see now is it's dropping down to the moving averages here, folks. We then need to see a bullish candle. It was printing all this stuff at $12. It's already at $13.79. So it's already moved some. We could keep an eye on this one as well. Yeah, and coal, listen, coal isn't like some kind of stunningly interesting financial instrument for us in any way, shape, or form. But we're gonna take a look. You know, we're gonna allow ourselves to consider a speculative trade. All right. Perfect trend trade. Let's look at a perfect trend trade. You know, one of my favorite of all time trend trades that we look at or find is on gold, the GLD. And if you look at the GLD and you look at this upward trend that began, you know, like here we go. So there's just this giant upward trend, right? And there's a couple of ways to look at a perfect gold trend trade or a perfect trend trade across the board. You get a clear uptrend and then you get two profit circles on the 4-hour chart, especially these two profit circles right next to each other. That is just clearly two different areas where it's a perfect buy trade, just absolutely perfect. I don't know if Zoom had anything like this. It didn't really have anything like this yet, right? So it's up, up, up and away, but it really hasn't retraced and given us two bullish profit circles. You could, however, substitute all of that for like two bullish profit circles on, say, a 60-minute chart, for example. You could. But a perfect trend trade it's really and practically and honestly, the perfect trend trade is an obvious trend in one direction or the other, and then two bearish or bullish profit circles that print in the same direction. Alan says, as China returns their metal returns, their metallurgical coal demand is coming back. Oh, so as China gets back online and coal prices are seeing a bid. Yeah, that makes perfect sense to me. Amazon's a perfect example. If you think Amazon, because you look at things. You think Amazon is in a long-term bullish uptrend. When you see two bullish profit circles, 20 or 30 or 40 candles apart, that's a buy trade on the 4-hour or the 60-minute chart. That's a 100% buy trade in both of those, all of those situations. That's a perfect trend trade. So Newell Brands. So this is one that I got really interested in, and I was like, oh my gosh, this could be a really great trend trade, a bearish trend trade, because look, it's dropping and it's in a downward trend and blah, blah, blah. And then I pulled up the 4-hour chart and it's got two bullish profit circles, not two bearish ones. You go to the 60-minute chart, you get two bearish profit circles competing with all of that. This is an interesting one because Newell Brands owns like Mr. Coffee and a bunch of appliances and stuff like that. This company is in giant amounts of trouble, and I was like, oh wow, this could be a really great trend trade. And it's below all of these moving averages. And so I decided, well, you got to look much further out. And if you look much further out, it's in a long, long, long term, extended downturn. This stock is in trouble. And it did print two bearish profit circles on the 1-hour chart. And on the daily chart, it is printing the entry on a bearish retirement pattern. It's got the bullish candle that rose up to hit the moving averages, and then the bearish candle to confirm it today. I think today at the close, near the close, if this candle for today is still bearish, what I want to do is I want to trade with the trend, and I want to buy Newell puts. It's in a downtrend. Sales are down. They have credit problems. I wanted to see the stock rise to the weekly pivot before buying puts or shorting the stock. And I think the 18th of September 2020, $12 strike price puts look really good to me. So I put a chart here inside of the slides, and I think I'm going to just wait and see today. It could rise as high as $13 before it's ready to turn around. But every other indication to me suggests that if we print a bearish candle today, it's not coming back. And we should short it. And the options are reasonably priced. They have a reasonable spread of between 10 and 15 cents. And they're priced at $1.65 or so. I mean, these are all super reasonable numbers that we like to use. And it is a trend trade. It's in a long, super extended downturn. It has credit problems, and I like it. The only thing going against this trade is, and the only worry is, insiders have been buying the stock recently. And I don't know if that's because of, they want to reassure investors or whatever, but they've been buying a lot. Laurel Hurd, Brett Icahn, Icahn Partners, Brett Icahn, all of these purchases, and some of them even, just a month and a half ago at $12, $11, and so forth. And we're talking about $1.3 million, $3.1 million, $6 million of purchases. So in the grand scheme of things, I'm not sure that these traders significantly increased their holdings, but it would concern me, so I would be very careful. Zoom has profit circles and divergences on the 1-hour chart to target 181. So let's take a look at that. Yeah, no, there's no way I'm doing it. Not in a trillion bajillion years. Not doing it. I'll let them just go. I'll let it go. I'm going to let Zoom just take off without me. I don't see the trend trade yet. If anything, I see bearish divergence and two bearish profit circles. If anything, you could look up Zoom and see. We could look at the fundamentals on Zoom and say, hey, is it priced fairly? Is this a fair price for a company? $622 million in revenue. They're going to blow through that. Revenue per share is good. Quarterly revenue growth is good. Gross profit is good. Earnings is good. Net income is good. Total cash is good. Total debt is really good. They have a ton of cash on hand. Yeah, this is a pretty great company that probably stands to move significantly higher. They're going to do that without me, though. I'm not going to chase after this one. Okay, is GoGo a strike zone trade? I also wanted to show you something. I've been looking at stocks moving pre-market and stuff like APOP, myocardia, whatever. What's it's like MYOK. Let's see these. Look at that move today. It's pretty crazy. $99 share. You think you can chase that? I wonder. Do you think you could buy MYOK and get away with it? Do you think you could do that? Like, I wonder if you could get away with like trying to chase after that. I think that's the epitome of trading a mistake, right? Chasing after moves like this. So I was reading through, I don't know if you've ever been to Profitly. Let's go to APOP. Let's just take a look at that. So I was going through Profitly. I mean, can you bet against that? Like, is that like, can you or chase that? So I was looking at Profitly. You've probably all seen this website. Tim Sykes, my friend, owns this website, and you can actually just look at the latest trades, capturing a quick volume spike on a percent gainer with good news. $14 profit. R Stoic. He bought APOP long stock. Bulldozer. I hesitated to buy in the $4.30 range. Missed 65 cents of profit. Would gladly take the small readjourn. All these people made $1. And I look at these losses. Bought intraday near the market open, but after spiking a bit started to fade. What I notice about the losses on Profitly are people chasing morning spikes. They book a loss and they're chasing a spike. So there's this morning panic type stuff. So NMHLY, I don't even know what that is. It's an OTC stock. I mean, we would probably not ever even be able to trade this. But look at this. Is that, I mean, is it a wonder that some of the people made money, but a lot of the people lost money? It's not really a surprise, right? Doesn't really surprise me. Got in at 48 cents, got out at 54 cents. Traded 1,500 shares. They did it today. Like that was some kind of crazy trade that this dude took today. I don't even know how this dude was trading over the counter stocks. It doesn't make any sense to me. So I just wanted to take a look at, folks chasing movement and, just sort of make the case that we couldn't all fit into trades like this. We'd be all trying to panic and push the buttons too quickly. You'd be better off waiting for bullish divergence and at least one bullish profit circle and buying it at $4.13 and watching it go to $14. You'd be way better off doing that. We'd be way better off looking at all the tradable stocks with 500,000 shares of volume trading under $1 that have bullish divergence and bullish profit circles. We're way better off scanning for stocks like that. You see what I'm saying? Let's actually do that. For the bounty spreadsheet, can you find me under $1 bullish KD, 2 bullish profit circles, volume greater than, I don't know, 300K. If you could put those on the bounty spreadsheet, I think that would be amazing. I think we're better off doing that. All right, let's look at GoGo, and then I gotta GoGo in a bit. Here's GoGo. So they reported earnings. Obviously, not going to report great earnings for the last quarter. It's a 4-hour chart. I'd love to see two bullish profit circles on this. I'd love to see that. I'd love to see two bullish profit circles on this. I'm adding it to the strike zone watch list just because it's a really cheap stock with lots of volume, and it jumped up, settled back down, and now it's kind of just skirting along here. And today it's printing another bullish profit circle. So is this a possible counter trend trade? If we're pricing back in the reopening of America, isn't GoGo going to do really well when the airlines start operating at capacity again? So I think it goes down as a possible strike zone trade, and I think it goes down as a possible counter trend trade, but we got to wait. And then KAR. So Brian put this on the list. Bullish divergence, two bullish profit circles, counter trend trade, right? Already reported earnings. This is a definite 1000% counter trend bullish trade. And we'd have to see some insider buying, wouldn't we? We'd have to see some insider buying or some good fundamentals. Purchase, 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 purchase all this year at $16 a share and around that. I like that people were buying tens of thousands of shares to add to their positions. I love this one. Question is, can you get options on this that are affordable? July calls. July $12.50 calls. What's the spread? It's not bad. I'd probably do it. I'd probably be willing to do it. Let's see what it looks like on the retirement pattern. It's not above the moving averages. It's below them. I need to see it rise above them. I gotta see these. If we're gonna take a counter trend trade, let's ask it to confirm itself to us. Let's force it to do something that we would want it to do. Yes, Tim does lots of OTC stuff. Yeah, Sue, this is I don't know what you feel about it, and I'm not even conflicted about it. I'm just squarely in the camp of it doesn't seem to make a lot of sense to me. It just seems it's too hard to chase those prices. There's not enough room for everybody in those trades. So, Sue says, what do you know about dark pool volume and how it impacts stock prices? I don't know anything about it, but my friend Stephanie Cameron, she is the stock whisperer lady, and she looks at dark pool volume. I don't know how she does it. I don't know how she finds it. And I don't know how she's looking at order flow like that. I don't know how I'm being recorded here, so I got to be careful. I'm not sure she actually can see dark pool volume. I'm not sure anyone can. Can we how to see dark pool trades? So let's just do a little. This is how I would dive into it, because I could have her on, and I guarantee she wouldn't tell us anything, right? I mean, not that she's a terrible person. She just wouldn't tell us anything. Yeah, I'm not sure that one actually makes any sense. Um, Dallas Morning News, or she is being interviewed by the Dallas Morning News. Charles Schwab now provides a window into dark pool trades. Space constraints won't allow me to explain the process in detail. Then you're worthless. But it's a Charles Schwab account, which doesn't require any money. A Schwab showed me how to access the so-called block trade indicator where dark pool trades can be monitored. Most every buy and sell trade is recorded. All right, block trade. So we'll do some research, Sue, into, let's do this. Dark pool volume are trades that are not. First of all, read Flash Boys. Go get the book, read Flash Boys. Um, and do a Google search on it. It's uh, there's large pools of shares uh, that you can dip into and trade from as a giant investor, and those trades are not actually recorded um, through the exchanges. They're just private transactions. Dark pool trades, block trade indicator. And we'll do some research into this together, okay? All right, I'll see you folks tomorrow, and we'll do some of the research. Bye for now.